Let's try this exam question, question 33a from the March-June 2017 exam paper. So let's see what our requirement is. They want us to calculate Online's taxable total profits for the year ended 31st March 17 for 13 marks. Okay, so let's go through the information that we have and see what we need to do. So here, we have the information in respect of Online Limited for the year ended 31st March 17. Our operating profit for the year is $896,700. You know that we have to start with this amount. Depreciation of $21,660 and amortization of a leasehold property of $9,000 have been deducted in arriving at this figure. Now, you know depreciation is not an allowable expense. Capital allowances are allowable, so we have to add this back. And then amortizing a lease is not allowable. You know that we get that income element and we have to divide it by the number of years of the lease, and that's an allowable expense. So this amortization is also not allowable. So we have to add these two back. Now let's look at the leasehold property. On the 1st of April 16, they acquired a leasehold office building, paying a premium of $90,000 for the grant of the 10-year lease. Office building is used for business purposes by Online Limited throughout the year ended 31st March 2017. Okay, so let's calculate the capital element on the lease. Then we'll get our income element and we'll divide it by the 10 years, and that is our allowable deduction. So let's calculate that. Let's just keep our working right below here. So we'll have the leasehold premium. Okay, so we had the premium paid. We paid a premium of $90,000. This is the full premium. You know that we have to deduct the capital element. And how do we calculate the capital element? It is 2% of the leasehold premium multiplied by the number of years of the lease minus 1. So what is our deduction over here? It will be 2% multiplied by 90,000 multiplied by 9. 16,200 will be our deduction. That's the capital element. What will our income element be? Is the difference. Subtract 90,000. This gives us 73,800. Okay, and as we are using this building for business purposes entirely for the 10 years, we can deduct a certain amount of the income element every year, which is the 73,800 divided by the 10 years of the lease. So our allowable deduction will be 7380 for the leasehold premium. Okay, so that's one working we have done. We're adding back the amortization and we're deducting this. Okay, so we're deducting here 7380. Okay, now we are being given the plant and machinery, so I'm assuming this is the capital allowances. We've added back the depreciation. Okay, on the 1st of April 16, main pool had this written down value and special rate pool had this written down value. 14 May 16, they sold a motor car, which is 18,100. Okay. On the 18th of July 16, sold all the items in the special rate pool for 9,300, and then they purchased a motor car for 13,700. Now we need to know the emissions of this car to see where we have to put it in. This has to be deducted from the special rate pool. And remember, even though they've sold all of the items here, the business is continuing to run, so there will not be any balancing allowance or balancing charge. We'll get the normal WDA of 8% for the special rate pool. And we have more information here. For the 14th May sale for 18,100, it was originally purchased in the year ending 31st March 16 for 17,200. Now you know if we're deducting from our main pool, it has to be the lower of the cost or the proceeds, and we see the cost here is less than the proceeds received, so we can only deduct the cost amount. That's the maximum that we can actually deduct. Okay, so let's do our capital allowances. Over here we have the motor car purchased is of a carbon dioxide emission rate of 90 grams per kilometer, and it's used by the company's employees. diagrams tells us that it's going to go into the main pool. Remember, I'm using the rates and the allowances of this exam year. You must use the rates and allowances of your exam. Okay, so let's do our capital allowances calculation right here so we can see all of the information. We have our main pool, we have our special rate pool, we'll have our allowances. So this is how we're going to head it up. What was our tax written down value? What was the brought forward value on the main pool? We had the 56,700, and the special rate pool we had the 12,400. Then after this we added this motor car. Yes, for 13,700. Okay. We also disposed of a motor car. We had the disposal over here. Yes. This motor car, which we had to limit the disposal proceeds to 17,200. Okay. And we also disposed of special rate pool items, all of the items, but remember, since the business is not closing, we will still get the writing down allowances. So let's see what value we have after this. I have 56,700 plus 13,700. Subtract 17,200. This gives me 53,200. Okay, 53,200, and over here I have 12,400. Subtract 9,300 gives me 3,100. Now we're going to get our writing down allowances over here at 18% and over here at 8%. So what will those be? 3,100 multiplied by 8% will give me 248. Okay, so I'm going to put that in my allowances section. And 53,200 multiplied by 18% gives me 9,576. 9,576, so 9,576. These are my allowances for the year. And then what will I be carrying forward in my pools? So subtract the 53,200, 43,624. 43,624 I'll be carrying forward to the next year in the main pool, and 3,100 minus 248, 2,852 I'll be carrying forward in the special rate pool. What are my total allowances? I have 9,576 plus the 248. I have 9,824. 9,824 as the capital allowances for this year, and I'll deduct this from my operating profit. So over here, for my plant and machinery, we'll have the 9,824 deduction for capital allowances. Okay, let's see what other information we have. We have qualifying charitable donations of 6,800 for the year, and these are not included in arriving at the operating profit, so we must deduct the 6,800. Then we have a disposal of a shareholding, so we're likely to have a capital gain. Let's see what information we have. On the 20th of March 17, they sold its entire holding of £1 ordinary shares for 9,600. They had originally purchased 40,000 shares on the 24th of June 10 for 49,300, and on the 7th of October 13 they sold 22,000 for 62,200. And these are my indexation factors. Now you know when we have a disposal of a shareholding, every time we make a new purchase we have to index the cost, and then when we're making a sale we subtract from the indexed cost. So let's do our share pool with this information here. Let's do the disposal of the shareholding. We're going to have my share pool. Okay, so initially what was it? We're going to have the number of the shares, indexed cost. Yes, we need our index cost. So our first purchase was in June 2010. We had purchased the 40,000 shares, and the cost then was 49,300. Then remember we had a sale in October 13, so we need to index these shares until October 13. So let's index to October 13. We'll take my cost, and we need the indexation factor. My indexation factor here to October 13 is 0.124. Okay, so multiplied by 0.124, this gives me how much? 49,300 multiplied by 0.124, the indexation factor, 6,113. Final index cost of 49,300 plus 6,113 gives me 55,413. So 55,413. Then we know we sold shares. We sold, how many did we sell? In October, we sold 22,000 of the shares. So we need to remove that from my share pool. So my sale over here is 22,000 shares. This will leave me with 18,000 shares. And of course, what will the cost be that I will remove? Well, I'll take the 22,000 sold divided by the 40 that I originally owned, and I'll multiply by my indexed cost. So that will give me, multiplied by 22 divided by 40, 3477. 3477. So what is my remaining index cost for these shares? 55,413 subtract 3477, 24,936. I have 24,936 over here. Then you know my final sale was in March 17 of these 18,000 shares. So I need to index to March 17, the shares that I have. What is the indexation factor that I'm going to use? It is going to be October 13 to March 17, 0.040. So I'm going to take my cost, 24,936 multiplied by 0.040. That gives me, multiplied by 0.040, 997 over here I get, 997. Okay. So what will be my final index cost for these 18,000 shares? I have 24,936 plus 997, that's 25,933. 25,933. And then you know I'm selling all of these 18,000 in March, so I have none left in the share pool, and I'll have to use the full index cost here, so nothing. So then let's calculate the chargeable gain. The proceeds, of course, subtracting my indexed cost of 25,933. Let's see what proceeds I got for this sale. I sold for 9,600. So these are my proceeds. But remember, we have a capital loss brought forward, and this will be a capital gain in this year. So we'll also subtract this. Okay, so I have my 9,600. This will give me my capital gain, and then I have a capital loss brought forward of 4,700. So this amount will be taxable. This is a taxable gain. Okay. I have my, so let's subtract 9,600 from that. 64,667. 64,667, subtract the loss brought forward. So 64,667, subtract 4,700 brought forward, 59,967. Okay, 59,967 will be my taxable gain. Now let's put everything together. They've also given you a brought forward property business loss, and you know that if we have property business losses brought forward, we are allowed to deduct them from the total income. So we'll deduct this when we're bringing everything together. So let's see what we had. We had my operating profit to start with of the 896,700. Then we're adding back the depreciation, we're adding back the amortization. Those values for depreciation was 21,660 and the amortization was 9,000. Then you know that for the lease we calculated the amount that we can deduct every year for the premium that we paid. So the lease premium, yes, we calculated 7,380 that we can deduct for 10 years. And we also had my capital allowances that we calculated in our working of 9,824. So let's see what we get. I have 896.7 subtract 21.66. Sorry, adding 896.7 plus the depreciation 21.66 plus the amortization. That gives me this minus my lease premium 7.38 minus my capital allowances 9.824. And that gives me 910,156. Okay, 910,156. This is my profit. This would be the trading. Then we had the capital gain that we showed. We calculated it from the share pool and overall. We have subtracted the brought forward loss. We got 59,967. This brings me to plus 59.967. This brings me to 970,123. 970,123. Now after this, you know we had my property loss. This is the total. Yes, total profits, including our capital gain. Then we had my property loss. Yes, and we've also had my qualifying charitable donations that were allowed to deduct from the total income. Qualifying charitable donations was 6,800 and my property loss was 12,500. So where does this bring me overall? Subtract 12.5, subtract 6.8. This brings me to 950,823. 950,823 is my taxable total profits which they have asked for. You see how we added back these? We had our separate workings here for all of these, and then we came to our taxable total profits which the question asked us for.